Welcome to ForexTV.com. It's Monday, April 14th. I'm Remy Hookey for New York Forex Market Buzz. In afternoon trade as of 1 p.m. Eastern Time, Euro dollar is trading at 1.5817. Sterling dollar is at 1.9811, while dollar yen is around 1.0113. U.S. equities are up in positive territory with the major indexes managing to eke out gains. Taking a look at today's U.S. data releases, retail sales climbed 0.2% in March, boosted by the rise in gasoline sales, which rose 1.1%. The headline number came in above market forecast for no change. Meanwhile, ex-autos retail sales were up 0.1% in the latest month, and business inventories in the U.S. increased 0.6% in February, while sales fell the most in over a year. This week brings a slew of U.S. data releases on housing starts, inflation, as well as manufacturing. Also, we'll be getting plenty of earnings reports, including J.P. Morgan Chase, Merrill Lynch, Citigroup, eBay, as well as Google. This afternoon, I'm joined by Mike Moran, Senior Currency Strategist at U.S. Standard Chartered here in New York. Good afternoon, Mike.
Good afternoon.
Thanks for joining us today.
Pleasure.
Well, as we kick off the week and look beyond the G7 meeting, the U.S. dollar has given up earlier gains, but the U.S. currency saw short-term support this morning as well as overnight, especially in euro dollar. A euro dollar has been coming off session highs, but heading into the week, what will drive the pair fundamentally and technically, what are your levels?
Well, I mean, I think the G7 meeting behind us and what can only be described as a fairly tepid market response to that. I think really the market is beginning to start to ignore some of these comments from the G7 because they're just not strong enough and didn't give a firm enough indication of where they really want to see rates. So I think we might see a little bit of dollar support as the market digests the G7 intentions. I fully expect that we're going to resume this dollar weakness over the course of the next 2 weeks, and especially for the euro, I think it is surprising how categorically ECB officials have been ruling out the prospect of rate cuts anytime soon. And even today, Mersch reiterated this view. So with that yield differential between the US and Europe staying wide, perhaps even getting wider as the Fed seems much more aggressive on the rate cut front, I can only expect euro dollar to continue to push through. I think it'll be a matter of time before 160 is taken out and potentially 165 by the end of Q2.
Okay, Mike, now that we've covered euro dollar, let's take a quick look at the Japanese yen. Today's Wakovia's quarterly report added to the bearish sentiment ahead of other earnings reports this week. So for dollar yen as well as euro yen, what's your outlook for the week?
Again, if anyone thought that the GE result last Friday was a one-off, then I think Wakovia's this morning is another wake-up call for investors on how bad the U.S. economic backdrop actually is. I think there's been so much focus on the financial sector, and quite rightly so, and the credit crunch. But people have forgotten that the macro economy is also deteriorating quite rapidly, and I think we have some key earnings reports this week, as you mentioned, and I think there is a greater risk of more downside disappointments there, and I think that's going to put pressure back on equity markets in general, which is not going to be good for risk appetite broadly in the currency markets, which would suggest to me that we're going to see some dollar yen downside over that period too. So I think 99.50 is clearly the next key support for us, and that's the level we're looking for in the next 2 or 3 week time frame.
Okay, now let's shift our focus over to the UK pound, and the UK inflation data will be released tomorrow morning, and this will be key given the BOE's concerns regarding inflation as well as the weakening economy over in the UK. So Mike, technically, what's your forecast for the sterling?
Again, cable has been one of those pairs which is kind of underperformed the rest of the major Europeans, principally because the Bank of England have been far more dovish in their policy responses, certainly than the ECB, and the economy has shown far more visible signs of weakness. I don't think that's necessarily going to change. What complicates things is that inflation does not seem to be easing at all in there, so that might slow some of the cable's gains. But But ultimately, I think we're going to see cable pretty much range bound for the foreseeable future, not being able to take advantage of the of dollar weakness as much as the euro has. So we're looking at probably a range between anything with 196 to about the 199 range over the course of the next 2 weeks.
Okay, Mike, and last but not least, before we wrap it up for today's interview, let's take a brief look at the dollar block currencies. Next week, we do have the Bank of Canada rate announcement, and this week on April 17th, the Canadian CPI data will be released. So if we could take a look at your weekly outlook for the Canadian currency and also your outlook for the Australian dollar.
I think certainly for dollar Canada, I think we've seen some downside, but really it hasn't really built too much momentum since last November, where we've been steadily recovering. So the Bank of Canada has been quite aggressive in their rate cuts as well, I think, and I think we're going to see dollar Canada start to trend slightly higher, if anything. So the dollar's stronger there, and certainly the technical patterns suggest that we're going to see some further mild upside. Again, I think the range we're looking at is between the figure and 104 with a slight bias to the top side.
Okay, Mike, thank you very much for your insight and analysis this afternoon. This has been your Forex Market Buzz with Mike Moran, Senior Currency Strategist at U.S. Standard Chartered. I'm Remy Hokie. Join us later this afternoon, 4 p.m. exchange, right here on ForexTV.com.